Hello, everybody. My guest today is John Fields. He is a message architect that loves to invent, build, and scale big ideas. He's got two recent exits, IP, and the other one was an acquisition. Previously an officer in a public company and has held positions at the White House, OPIC, Deloitte, and Barclays. John, you ready to take us to the top?
I'm ready.
All right. So I get to be extra hard on you because you said you listened to the show, right? So I can be really tough.
I said good things.
You're trying to butter me up before the thing starts, so I'm soft, all right? No, right. But thank you for listening. I appreciate that. All right, Growyourbase.io is what you're building today. Help us understand what the company does.
Sure. So this is the team's third project together, and which is helpful because we really understand our strengths and weaknesses. So we took a deep dive last year in researching market trends in online advertising. Wanted to understand this social influencing, which is really hot, and there's a lot of different players involved. And what we came away with was, where are the pain points? And the big issue that kept coming up was companies were spending some large amounts of advertising dollars, but trying to figure out what were the results from those dollars, how do you audit them, and then how do you keep away from the fraudulent activity? And I think it's very inducing to say you want to spend a 6, 5, 7 figure, whatever it is, on a celebrity influencer, but understanding the stickiness and really knowing what the long-term effect is difficult. So we kind of took all that information and research we did and said, we want to reimagine how companies connect with their customers. So this idea was percolating in our head, and we did some trial and error. And what we did was we designed a new platform that allows companies to come in, use our tools on the platform, and over a period of time, find a user base.
So, John, I want to go deep here on one of these things. So, first off, is this a crypto? Are you guys built on blockchain? Is it a crypto play?
We're not built on crypto, but we are part of our in the background. Part of the mechanism runs on crypto, but we don't lead with it. It's just something that actually has a really good use case for what we're doing, and so it's that's what we're using it for right now.
So I want to go deep on one of your examples. You have Joe Rogan listed on the website, right? Grow Your Base obviously ties into your parent company AC3, and here's what it says. It says Joe's logo's there, and it says complete the following assignments for the JRE podcast. Download the podcast, subscribe to the newsletter, and leave a review to earn AC3 tokens. And the token is, if you do that, you get one AC3. Break that down for me. What's that mean?
So So let me just walk you through how particularly that one would work. What people will come on and companies want is different things. We thought that a lot of companies would want some really cutting edge analytics. Number one thing they want are followers, right? So I thought email was very, 2014 as a number one priority. It's still what a lot of our clients want. So they'll come in and ask our audience to say, hey, would you follow us here? Would you sign up on our newsletter there? And once they do that, they are paid instantly. So what's really great is what we do is take part of that marketing budget from up front, and we distribute that out to our users. We call them earners, and we incentivize them then to come back and then purchase or re-engage directly with the advertiser or the company. And so that's gold for an advertiser or company because they're getting really multiple engagements, 2 bites of the apple. Now, for a podcast, there's not a lot of products they have. They're really looking for users. So there's not a lot to purchase when you have let's say a newsletter or a podcast. This works really well when there's a product to purchase that you can earn for.
Is this example with Joe, is this working well for his show?
Yeah, we just launched in February. And all organic growth. We've got 2,500 active users in the first month. And, we're driving so far for each of our paying customers, which we have 13 already, anywhere from 100 to 500 authentic, real emails or users to their platform.
And those 13 customers, on average, what will they pay per month for access to this platform you've built?
So we have a recurring subscription model. There's a $500 option and then a $1,500 option. We have been asked by some companies with bigger marketing budgets if we could put that to work, which is exciting. but we're not able to digest that yet. And we're hoping in Q3 of this year, we'll have enough users and earners on the platform to be able to digest some bigger budgets.
So 13 customers, $500 ARPU. You're doing about $6,500 a month right now in revenue?
That's right.
Okay. And where were you exactly a year ago? Pre-revenue at that point?
Yeah, we just launched in February of this year.
Okay. And is that when you created the company, or were you coding for, 3-4 years before that?
Yeah, we started in 2017, going down some rabbit holes and trying to do some trial and error and figure it out. And so last year, we got it all together and we started building in the summer, and then we launched in February.
Okay. So first paying customers in February.
Yeah.
And have you guys raised capital, or are you bootstrapped?
We're self-funded
Okay.
Up to this point. And now that we have some users and we have a backlog in the pipeline of companies to onboard, we are going to do an equity raise next month.
How much do you want to raise ideally?
Not more than $500,000.
Okay. And you said you're going to do that on actual priced equity, not a convertible note?
Probably optional, but we're looking. We have a long-term vision. We know how business building goes, so we're looking for partners that want the equity and grow along with us.
Okay. And what do you hope? I mean, obviously, you have to have a negotiation here, but what do you hope the valuation comes out to on the $500K that you raise?
We've set a $5 million valuation.
Okay, so you want to sell about 10% of the company.
That's right. And with this asset that we've created already, the token, it is traded and is fungible. So we've actually placed in the entity, which we might appreciate, a large amount of those for some investor protection. So there's assets in the company.
I don't understand. You have to forgive me here, John. I actually don't understand how all that works, right? So if I add up all your outstanding, I'm thinking of this like a public stock. If I add up all of your outstanding tokens and the current value per token, how much value is there right now on the AC3 token or whatever you call it?
So we don't own them all. There's some out there in the public. But if you multiply the 550 million that were created, we own the bulk of those. So that's, depending on the current price, anywhere from $3 to $4 million of value.
Okay, so they're kind of like worth cents each, something like that.
That's exactly right. And what they're really good for is micropayments. There's a lot of interest and hype in the crypto space, but what we found, and we could stand up in a room full of experts and say, this is a better mousetrap. This is a better way to distribute to earners globally at very low cost and very quickly. And so that's what we're focused on. But at the end of the day, we're a growth platform for companies. It just happens that we realized and tested and proved that the crypto coin, the token, is a really efficient way to do global micro.
No, I get the global payments thing. I'm just curious, like how it holds the value if you're holding the majority of them. Like there's not a high velocity of trading every day. So the last time that price was reset, I mean, it's not reset every second like a public stock, right? I'm just curious, how does it hold that value?
So the companies that come in, they purchase with USD. So we actually have what a lot of companies are looking for, a way to get non-crypto people into the system, and they purchase a tranche of our tokens with a subscription. They don't touch them. They don't deal with them.
You're talking about the $500 per month they pay you?
That's right. Yeah.
That's actually going towards buying, 10,000 AC3 tokens.
That's right. Yeah.
And then you distribute out the tokens to people who earn them. So it's like, instead of going and using, power to go like down a hashing thing, right? They could basically earn by doing the action.
That's right. So it's interesting. So before 2017, when you wanted to get crypto, you would mine it.
Yep.
2017, 2018 was really about buying it on exchange or an ICO. And we think a big part of the future is really earning it. So you've seen Coinbase Earn come out, which is really earn to learn, which I think is really clever and really needed to help educate different people on that platform. We're really earn to engage. It's a good way to incentivize users to engage with companies. And we want to have multiple campaigns. So over a period of time, they keep re-engaging with the companies. And at the end of, let's say, 6 months, they've either connected with that company, used the product, want to continue on their own to support it, or they'll move on to another company and product on the platform.
So you're slowly converting the, whatever it is, the 550 million AC3 tokens you have today. Every new subscriber you sign up, the Joe Rogans of the world that pays you, or the brands of the world that pays you $500 per month, you're essentially giving them a portion of your 550 million tokens valued together at $3 to $4 million. So you're essentially basically spreading out, like you're decentralizing again where those tokens are kind of coordinated. You're essentially converting to fiat though, right? Your own?
Yeah, that's right. So it's a good way for deployment as opposed to what a lot of companies did. And we had the option to, but to exchange them up front to people that want to really are speculators, are flippers, and which never made a lot of sense to us because we said, well, we want people to use our platform.
Totally.
Yeah, so it's not, we can't do it all at once, and we don't want to do it all at once. We want to do it over a period of time, like you've identified. As people come into the ecosystem, they'll own a tranche of those. And once they recapture them, if somebody buys them from them, they can use them for another campaign.
So what is the relationship between the cap table where you're trying to raise 500 grand on today and the 550 million tokens you're holding currently valued at between 3 and 4 million? Are those tokens like if I buy equity in your company, do I also now own essentially a portion of the 550 million tokens you have?
Because there's a lot of, it's a great question. There's a lot of gray area in this regulatory environment. We separated the platform out because the platform has revenue, but we've also put in the entity a tranche of, an assignment of tokens so that there would be assets in there, but not all of them, but a large.
How much? Portion. Like $1 million worth?
Yeah, more than that, actually.
Okay.
Yeah.
Okay, good. That's essentially like it's kind of like when a bank gives you a mortgage for your house. The collateral is your house. You're essentially saying, here's our collateral. We'll put $1 million or $2 million, dollars worth of tokens in the equity entity.
That's right. That's
yeah.
Right.
Interesting. Okay. Talk to me about team size. How many people today?
We have 4 full-time, and then we have 3 part-time. So like a graphics person would be part-time, and our legal help would be part-time.
Too early to talk about churn and expansion revenue?
But we're ramping now, and that was we're a little ahead of schedule in terms of doing a raise. We thought that would be in the summer, but we just the story is resonating with this idea of having people be able to find authentic, pre-vetted users to check out their product and their brand.
What is it costing you, fully weighted CAC, to get a new $500 a month brand signed up with you?
My partner, Steve McGarry, is really savvy with social influencing, and that's his domain. So we've been fortunate. We haven't had to spend any dollars yet but we have an advantage with his abilities to understand how to reach out and network. And he's built a base over a long period of time. He's a social influencer. We plan to, in the next couple months, to start testing out some different ads, Instagram, Facebook, LinkedIn. Are
you burning capital today?
Well, just on development. Of course, we spend a lot on development.
But my point is, like, you guys are bootstrapping this, so you and your co-founder are putting in your own money to drive this thing, right? So,
yeah, that's right.
So like, what are you like? Total expenses per month right now are about what?
Including development,
everything, yeah.
Yeah, it's between 15 and 20,000.
Okay, so not bad. And you guys are just essentially writing checks each month to fund this.
Unfortunately, that is the.
Sometimes you gotta do it in the short term. That's part of the risk, right?
Yeah.
All right, John. Very good. Now, quick question here, touching on the White House. Did you do a bunch of crypto stuff at the White House? Like, what got you into this?
I was when I was young, I was obsessed with politics, just really interested. And then I met my wife in '96, and she said, we could be together and get married eventually if I didn't become a politician. So I moved away from that and got interested in capital markets and advertising and marketing. And I didn't realize it, but I was a closeted marketer. I love writing, copy, and just understanding the whole ecosystem.
Very good. All right, let's wrap up with the famous 5. Number 1, what's your favorite business book?
Famous business book. I don't know if it's a business book, but I read Deep Work by Cal Newport. I don't know if you.
That's good. Yep. Number 2, is there a CEO you're following or studying?
CEO I follow. I read everything Warren Buffett says. He's kind of folksy and it seems simple, but when you peel back the layers, it's really brilliant and really keeps me engaged.
And number 3, what's your favorite online tool for building your company?
Favorite online tool is OneSignal. It's mobile push notifications, and for what we're doing, it's perfect.
How many hours of sleep are you getting every night, John?
7 hours.
Okay, and what's your situation? It sounds like married, single. How many kids?
Married, 2 kids.
And how old are you?
45.
45. Last question. What do you wish your 20-year-old self knew?
That good is sometimes good enough.
Guys, good is sometimes good enough. His company, Growyourbase, are helping influencers, right, earn to engage, and it really is a marketing platform focused on the social influencing space. Looking at raising some capital here shortly. Currently, 13 customers paying $500 per month. They've got a team of 4 people burning about 20 grand per month as they self-fund, totally bootstrap. Looking to potentially raise 500K here in the next couple months. John, thanks for taking us to the top.
Thanks, Nathan. Really appreciate it.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it, and the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.